Here we go. Hey everyone, welcome back to another Ask a CPA podcast. My name is Brett Phillips. I am a CPA here in Dallas, Texas, and I'm here with Russell Wallace, the CPA, the man, the myth, the legend. Here he is. What's up, Russell? How you doing, man?
I'm doing great. I'm doing great. You shouldn't pump up my introduction so much, right? I feel like I'm gonna let people down if you're too good.
No way, man. You bring it. You bring it. Well, on this podcast, we take a few questions from people who have submitted their questions through our website at askacpa.co or on our YouTube channel. You can leave comments down below. Some people will leave questions there. And yeah, we'll jump on here, throw throw out some ideas and chat back and forth and kind of come up with some strategies and try to help people save on taxes. My goal whenever I meet with a client is to have them pay the least amount of tax allowable by law, of course, and to come up with some strategies to help them mitigate their taxes. So if they feel like they're overpaying for whatever reason, we try to get creative and come up with some strategies or some things to do that they can execute on to help minimize their taxes, whether that's retirement contributions, health insurance, starting a business, getting creative. There's so many different ways and strategies and things that you can do to help minimize your tax liability. The tax code is really set up to incentivize people to do what Congress wants them to do, right? So they want you to create businesses, they want you to employ people, they want you to invest in the country, they want you to um, invest in certain industries, whether it be infrastructure or oil and gas or healthcare or housing. They have incentives for you to do that. So it's our jobs to make sure that we're taking full advantage of those incentives that they've laid out for you.
You know what they say,
Um,
Brett? The only two guarantees in life are death and taxes. And if you
that's
if you
right.
make a lot of money, you're gonna pay taxes. You're gonna owe some taxes. But like you said, we really try hard to make sure that that's the lowest legal number possible, right?
Right. Absolutely.
Well,
So
along
let's
that
jump right
line, we've
into it. Oh,
yeah.
sorry. Go ahead.
I was just going to say along that line, I was pre-reading here some of the questions we got from askacpa.co, and I was a good introduction for William here from Phoenix. So he's got a question here. As a high-income W-2 employee, I feel like I pay a lot of taxes. So what are some of the best strategies to minimize my tax liability at the end of the year? So what do you
This
do there at your firm, Brett, to help folks like William?
Yeah, this is a great question. So the first thing I would do is to make sure that you are fully participating, maximizing your retirement account at your employer. You're at least doing the if your employer has a 401k match, you're at least matching that 401k. And then I would still go above and beyond that and over contribute to a 401k. You kind of max that out. Um, and then I would look at any other pre-tax items that you can contribute to, whether it be an HSA, FSA, um, any other employer sponsor if they have health or if they have life insurance or I know that's not pre-tax, but still any other benefits that the employer has. I would first maximize those as much as possible. The next thing I would do would be to kind of get creative with either your investments or start a business. Start something on the side, whether it be consulting, whether it be um, some kind of other business that you can do that's complementary to your day job. Obviously you don't want to compete with your employer who's paying you, but if there's something that you can do, if you have a set of skills that you can do, where you can consult outside of that, where you can start to expense some of these expenses that you're incurring but you're not able to deduct. So you could take a home office deduction against that income. You could take, travel or training or, any other expenses that you can come up with, and you can even contribute to a retirement account with that income as well. So Yeah, that's kind of one area. It'd be to start a business. It could be totally unrelated. We have guys that work in banking and they have like fireworks stands and or they have all kinds of other businesses that are totally unrelated to their day job. They just do it for fun and it makes a little bit of money. Um, so that's kind of another avenue. Kind of your third option would be to start investing in things like short-term rentals, where we can take accelerated depreciation on some of those assets. It can create a tax loss, which could then offset some of the income from your W-2. You really got to be careful when we're talking about losses from real estate activity. You need to be a real estate professional in order to take a lot of those losses. So there's certain limitations. So we definitely want to meet with that individual, go over all these different kind of gotchas. There's passive activity loss limitations. There's at-risk basis limitations. So there's multiple limitations on some of these expenses. We want to make sure that we're being really careful and we're tracking those and making sure we're not going through all of these headaches and not able to take the deductions against the W-2 income. So yeah, that's kind of what we look at. So first, we want to make sure your employer we're maximizing the expenses through your employer. Next, we want to look for starting a side business or investing in some kind of real estate activity that could potentially be a little bit more passive than a full operating business. You could be out there shooting off fireworks on the side of the highway, or you could buy a vacation rental. Either way, I think it'll probably save you some income, or it'll probably lower your overall tax liability.
Well, yeah, I like that you mentioned the HSA there. The 401k everybody kind of thinks about and knows about, and a lot of people max that out, which is great. It's a huge benefit. But also the HSA, especially if you're a high income earner, because your income limited out of doing a Roth or a traditional IRA, that sort of thing, right? So having that HSA, maxing that out every year, is really helpful. There's some strategies around not using medical expenses today, to take that deduction, compiling them up over time, and then kind of taking them out kind of in retirement. Because with an HSA, you can kind of treat it as a retirement benefit account here, kind of
Right.
similar to 401k, right? So investment choices are generally a little bit more limited, but it's still a great tool when you think about if you're in that top tax bracket, you're getting a 36% return on your money day one, right? Um, and then on the short term rental, I think that with kind of the Republican trifecta here on coming up here in 2025, I think we're going to get some extensions of that bonus depreciation and doing some cost segs on that short-term rental. So especially if it's a pretty high dollar cost short-term rental, getting that cost segregation study, that way you can kind of front load a bunch of those deductions is great. Now, if you,
Right.
like you said, we gotta watch that passive activity loss limitations, right? So PALs, and but if you're in that tax bracket, you need to be working with a CPA anyway. They're going to be able to talk you through kind of the nuances of those things. But just kind of for here the podcast, I think just making sure that you realize that there's some things that you have to make sure that you don't do. So talk to a CPA and don't step on those landmines along the way there.
Right. Yeah, I've got a condo down in Florida, the Gulf of America, as they've renamed
Gulf
it.
of America, I like it.
And yeah, it does well, but there are expenses that are related to that. We have to go down there and fix it up, and it's pretty active. My wife is a real estate agent, so she's already involved in that business world. But yeah, take it or leave it. Sometimes I hate it, sometimes I love it. It's one of those things that it is more active than people tend to think. I mean, you're always on there responding to comments or questions, and negotiating rent amounts, and people are always trying to haggle with you. We had some spring breakers that they said, "Oh, we want six young spring breakers. What's the age requirement on people renting?" And we're like, "Oh, no thanks,
Older than
we'll
you.
pass." Yeah.
Older than you.
There's all kinds of things you need to think of when you're dealing with short-term rentals, but they're fun. I mean, it's a cool way to make some money. I really like vacation rentals. You know, it's a little more hands-on, but it's fun to have a spot where people want to go vacation, and you know, when you have to go down there and take care of it and clean it up, at least you're sitting on the beach while you're doing it. After you're working on it all day, you can sit back and have a brewski on the beach, which isn't
It's not all bad. It's
it's
not
not
all
all
bad.
it's not all bad.
Well, there's
Um,
also, you mentioned the side hustles, and our last episode, we went pretty deep on the side hustles. And so be sure and check
yep.
that out, guys, if you want to know more about that. Opening a business is probably the best tax planning tool that you could have, right? It just opens up a lot of opportunities in a lot of different ways. And so be sure you check out that episode. It's just the last one. Maybe last one or one before last, but make sure you check that out. I think it's got some good information for you.
Yeah, you should be listening to all of these. These are binge worthy episodes. These are fantastic.
That's right.
Um,
That's right.
so we got the next question. Here we go from Lucas in Chicago. You ever been to Chicago? We talked about this before.
Oh, yeah. Yeah. Cubs game.
That's
Went
right.
to a
That's
Cubs
right. We
game.
did
Went
talk
up
about it.
there, hung up there for a convention, and so since I was there, I had to go to a Cubs game. They were in town,
Yeah,
so
absolutely. Wrigley Field. It's the best. Um, so Lucas asks, how can I prepare my business for a potential sale or valuation? Russell is the valuation king. What do you think, Russell? What are some ways to prepare your business for a potential sale or valuation?
well, we're talking about. I think this is a really good question, Lucas. And if we're talking about preparing your business for something like this, you've probably got a business that's been around for a while. It's established. It's probably got a good bit of revenue, a good bit of income. So, I mean, you should be on an accounting platform. For most people, QuickBooks Online, it's going to be enough. But whatever I've gone in to kind of help prepare a business to go to market and to be sold, that sort of thing. One of the things I'll do is I'll go back 3 years and we'll clean everything up, make sure everything's reconciled, make sure everything looks nice. We want to make sure that whenever the buyer comes in and asks for your financials and maybe even access to your QuickBooks, that sort of thing, we want to make sure that everything is just as clean as it can be. We don't want any distracting negative questions. There's kind of a saying in the business transaction world that time injures all deals, right? And so if the buyer comes in and they've got a bunch of questions about like why did you book this here, or how did you do this, or what does that mean, that sort of thing, then it's just going to cause more time, and eventually the time is going to injure your deal, and not in a good way, right? So it's sometimes it can just outright kill a deal, and you don't want that to happen over something where you can just spend a couple $1,000 and get it all the way cleaned up and make it look nice. So that's kind of the first thing, right? The second is that if you've got a bunch of personal expenses and things like that running through your business, or if there's some what we'd call EBITDA. If you're not familiar with EBITDA, it's earnings before um, uh, interest, taxes, depreciation, and amortization. So it's the other terminology that people use a lot is SDE, or seller's discretionary earnings. But if you've got a bunch of add backs and business changes that you've made, you want to make sure that you're working with a CPA that is familiar with doing this kind of work and is familiar with like what can qualify as an EBITDA or an SDE add back, and that they're pulling these things out, and that way you're not getting dinged for kind of one-time expenses or non-operational type expenses. But whenever you create your financials or you're preparing your business to sell, and you're creating these financials, you want to make sure that it's clearly stated, it's easy to track back, and it's easy to understand what these add backs are for. You don't want to just have like just some general numbers and general names. You want to be very specific. Again, you want to limit the questions. You want to answer all the questions that someone's going to have before they have them. But the key thing to do, the starting place here is make sure that your financials are in tip-top shape, as clean as they can possibly be. Make sure if you're due management reports, things like that, if you kind of have, you're following Traction or one of these other like EOS, one of these other kind of systems, and you've got some management reports, some monthly reports or quarterly reports, and maybe you've got some holes in them, like go back and backfill those holes, right? Make sure that when someone asks for something, you can give them, you can say, hey, we run on the EOS system. We do a reporting every month where we talk to our leadership team and all that. Well, make sure you've got at least 12 of those things, right? Because you do them every month. You don't want, say, we do this every month, but you only have 6. That it's
Right.
not, the definition of every month. But it really just comes back to making sure that when you say that you've done something, you say your financials are clean, you say you made, the business made, $1.2 million, that you can justify these things and that everything you're saying is true. And so, it may mean that you have to backfill this stuff. So I generally tell people, 6 months, 9 months before you want to go to market, right? No later than that is when you want to start talking to a CPA. So make sure we can get all these things cleaned up and we can backfill these operational reports, backfill these financial reports, and then kind of carry them forward. And so that when you go to market, right, you're going to have the smoothest possible process. And that's going to increase or put upward pressure on what we'd call your multiple, right? So businesses are generally traded on a multiple of earnings or a multiple of revenue. And so we want to put as much upward pressure on that multiple as possible, right? Most people are going to sell a business one time in their life, right? We want to make sure that you make as much money off of this thing as possible. What
Right.
about you? You got some additional advice there?
Yeah, I think when like you said, you want to be prepared. So you want to have all of everything ready to go, right? You want to be able to, they're going to ask for financial statements. They're going to ask for bank statements, tax returns, lease agreements. They're going to want a list of your employees, how much you're paying each employee, how long have they been there, what's their job title, what do they do. Um, these are common questions. Any company that's going to be acquired, they're gonna want to know all this information. So make sure you already have it. I mean, you shouldn't have to be staying up late at night, the day after you go to market. You should already have all this stuff ready to go, saved, put aside, and super clean. Like you said, be able to explain everything. If there's What they're going to do is they're going to pull your last 3 to 5 years of financial statements, and they're going to look for trends. They're going to look for dips in revenue. They're going to want an explanation for that. So make sure that you're ready for that. You can explain your financial statements. I know we did one a couple months ago where we were doing the buy side due diligence, and we went in and reviewed the financial statements, and all they had was annual financial statements. So we want monthlies. Well, they didn't have those. Well, I mean, what business doesn't have monthly financial statements? And they obviously weren't ready to sell. They didn't have their leases. They didn't have, they were like trying to piecemeal it all together. They couldn't provide us with the financial data that we requested. And so, and they went through a broker too. So I think, if you're going to be working with a set of professionals, they should have already vetted this guy and said, okay, this is what you're going to need to have in order for us to be able to sell this business. I mean, if you don't have financial statements, like, good luck. There's no way we're going to be able to sell this. No one's going to buy a company with no financial statements just based on your recommendation or your promise that, hey, it's a good business, I promise. Yeah, get out of here. Let me see where
Yeah.
the numbers are.
I don't care how honest you look.
Right. And if it's, if you're doing shady stuff, stop doing it. Stop. You can't. A lot of people will have like a portion of their business that's like cash, and they're like, hey, I don't report that cash. Well, then that cash is not going to be included in the sales price of this
That's true.
business. Sorry, no one's going to take that into account and say, oh, we're going to go ahead and add in another 100 grand of cash payments that you didn't report. Like, that's crazy. Don't even. You should have been including this in your gross receipts, in your financial statements, in your tax returns, and paying income tax on it. If you're not going to, then that's, first of all, it's tax fraud, so you don't want to do that.
Yeah.
But that's not going to be included in the valuation of the business, unfortunately. So like you said, make sure that it's clean. Make sure that seller's SDE, seller's discretionary earnings, clean. You don't have a ton of add backs for personal stuff. You just don't want it. So, but
I think the thing
be
to
prepared,
remember is,
get ready.
yeah,
Yeah,
I
sorry.
think the thing to remember is that when, just like if you're thinking about selling your business here, Lucas, right? So you're going to come to a CPA and want to make sure that these things are cleaned up and taken care of, right? Well, that's what we call sell side diligence, right? So we're gonna kind of pre-diligence or sell-side diligence. But the people who do sell-side diligence, they also do buy-side diligence, right? So the people who put all this stuff together to get it ready to go market or whatever, we also all do kind of buy-side diligence. So if you're not using a professional, right, then what's going to happen is your buyer is going to call somebody like myself, somebody like Brett, and we're going to dig through your financials, right? And so we've seen a lot of these things. We've seen where the bodies are buried, and people's kind of accounting software and books and stuff. And so we're just going to pick it apart, right? And we need to, right? Because our client's the person buying this business, and so we want to make sure if they're going to spend, $1 million or $2 million or $10 million buying your business, that it's going to be a good investment for them, and they're counting on us to do that. So we're going to pick it apart, and that's why you need to make sure that you've got this stuff together. Because even if you're not using a professional, then the buyer probably is. And if they're using bank financing, the bank is probably going to mandate that they use a finance professional to come in here and look at this.
Right, and then they're gonna. What's going to happen is you're going to put forward some basic financial data when you put it out when you go to market, and you say, okay, here's my financial statements. This is what I'm asking for a purchase price. And someone's going to come in and say, okay, great, I'll buy this business. Here's a letter of intent. Here's your purchase price. That's fine. Here's some terms. These are the basics of what the agreement's going to look like. We need 60 days to do due diligence. You say, okay, great. That number looks great. You're going to give me $1 million. Perfect. I'll take it. And then you're going to start due diligence, and they're going to say, what is this? Why aren't you paying yourself a salary? You're involved in the day-to-day activity. That's another add back. That's just going to bring down the net income of the business because it's an additional expense. Why aren't you doing some of these things? This number's overstated. This number's understated. And we're going to go through and beat it down. They're going to say, well, okay, now that we've done our due diligence, the business is really worth $500,000. That's what we're willing to pay you. And it just, every time you renegotiate it's all negotiation until you write the final check. So, don't think that based on that LOI, that's the number that you're going to close with. You want to make sure that those financials are really tight, and then you may close near that number. If your financials are garbage, you probably won't even close the deal. I mean, what percentage of actual businesses that go to market close? I mean, it's a very small percentage. So if you don't have your numbers ready and cleaned up, it's going to be really difficult to close, to go from LOI to actual sale. So I would definitely recommend that you get everything cleaned up. Definitely talk to a CPA before you get too far into it.
Yeah, that's great advice. That's great advice. Well, guys, I think there's our questions for today. And so if you've got some more questions, go to askacpa.co. That's askacpa.co. Go over there, ask some questions, just like Lucas did here today, and William there from Phoenix and Chicago. If in YouTube, you can drop your question in the comment. Be sure if you're watching on YouTube, you're hitting that like, you're hitting that subscribe. If you've got it on one of the podcast platforms, Spotify, Apple Podcasts, make sure you're subscribing. Share this around to all your friends. We're here to help you save some money on taxes, and be sure to come back and join us. We're going to be dropping these episodes just here periodically whenever we can get them done.
Absolutely, yeah. Make sure you hit that like and subscribe. Let's
like,
go.
Subscribe. There we go.
Awesome. Thanks, Russell. Great episode. We appreciate everyone listening. We'll see you on the next one.
All right. Talk to you soon, guys.
All right.